Sure, a little anxiety is a good thing when it's well placed. And look, I'll admit, over the past few weeks, I was getting a little bit concerned. Look, we've got a laundry list of issues attacking this market. You have China trade issues. You've got rising rates, which is one of Wilson's points. You've got concentrated, expensive tech valuations. Again, a real concern. Composition of the market. All of these issues sort of hitting the market just at a time where optimism was running at a peak. And then, as I thought about it, I came to my senses. And I realized that, hey, we may not be in a bear market. Maybe we're just in a midlife crisis market. And in a midlife crisis, people do irrational things, and they do them at inopportune times, and they usually regret them later on. And that concentration into the major market averages, into the NASDAQ 100, into the S&P, into that handful of names was ignoring all the good things going on in the economy. And that's what created the volatility, when everybody ran for the exits at the same moment. So that's precisely what we don't want to do here. You know, I just tell you, when I walk my kids to school in the morning, my son said, "Dad, you seem a little bit down. Why are you so concerned?" Hey, I'm worried about the markets. Maybe we should buy some portfolio insurance. Maybe we'll add a little bit of gold here. My daughter said, "Hey, if international valuations are so cheap, why aren't we adding to international? If emerging
How old
markets
are your kids, Larry? I mean, geez, I mean, you could take them to work. You could take them to work and run your money for you. I get my best investment advice.
And you know what? They were right on the money here. They were right on that. This is an opportune time to rebalance portfolios. Maybe Mike Wilson's right. Maybe the tech market is at risk, but some of those tech names are becoming value names here. And I think we want to take a step back, look at the economy around us. You can't find a person to fix a washing machine right now. That's how tight the labor market is.
All right, Larry, you want to get Art. And Art, where do you stand? Midlife crisis or end of the cycle kind of feeling here?
Right. Let's just frame that up as a market question, not a personal question. And I'll say that I think right now we're at a point in time where we should get used to volatility. 2017 set a record for the lack of volatility, and I think 2018 volatility probably normalizes. So we had a little bit of a downdraft in February. First week of February, we were down 8.6% on the S&P 500. That shocked us because we hadn't seen it for a while. I think the same thing is happening right now. I think one of the things to key on here, though, is that all of the things that are being professed to be the reasons why we sold off starting about a week ago have come back in. So whether it's the yield on the 10-year going from 3 to 3 1/4, that's now sitting at 3.16. So that's stabilized. The dollar, for example, had a 97 print on the DXY. That's got a 94 handle right now. WTI had a 75 handle, 76 handle. It's got a 71 handle right now. The VIX, has pulled in 10 handles right now. So I just think that a lot of the things that we were hyperventilating about last week are just calming themselves down this week, right when we head into the heart of earnings season. So we're going to start to hear from companies, and they're going to report right when their stocks and the indices that they're in are sitting at support levels. So I think that's a better place to be for the third quarter reporting season. I'm much more concerned about what guidance sounds like and input costs and what trade means to guidance. But I think right now the market's in a much better place than it was 2 weeks ago to start earnings.